Historical mortgage changes happening in Canadian real estate market. From 15th of December, this is going to change the affordability of buyers. As a home buyer, you only need $75,000 to buy $1 million property. This is an opportunity for first-time home buyers. We are going to talk about the major reform in the mortgage industry. What are its implications on the affordability? We'll talk about the spring market of 2025 and also whatever the properties first-time home buyers are buying. So let's go into the number you need to have. This is a savings you need to have when you are buying a property of $1 million. Why? Because two new rules changes are happening. First of all, as a first-time home buyer, you have 30 years to repay your loan, which was 25 years before. This change is for first-time home buyers or for new build properties. Second most important change is now your affordability limit have changed because now you need to pay less down payment because up to 500,000 you have to pay only 5% and from 500,000 to 1.5 million you have to pay 10% of the remaining. I know this is looking confusing to you. Let's go into this one, how it is changing your life as a buyer, because as of today's rule, when you are buying a property up to $1 million, you are paying 10%, but anything crosses 1 million or more, you have to pay 20%, which is 200,000 for $1 million purchase. A lot of buyers in Canadian markets were suffering because of this regulation. It was hard for them to save that much money for a down payment of their first home. Now the regulation, you have to pay only 75,000. It's a huge difference of 125,000, and this difference increases if you move towards the higher purchase price. So up to $1.5 million, you can buy a big property if you can afford it. The minimum down payment requirement have reduced to 125,000, which was 300,000 before. Now your affordability have increased, but I have some concerns on this rule because now you have a more tenure of 30 years to repay your loan. Obviously, you'll make bank more rich because you have to pay more interest rate. So that's the other side of looking at this. Second is, as a buyer, you have more access to the properties, but it is going to push the properties which are in the border range of $1 million because now affordability goes up, more buyers entering the market with less savings, and it will push that market. So it might result in a hot real estate market of 2025. Another is rental market shift, because if more buyers are entering into the market, so there's less demand for rental. Good opportunity for someone who's renting. I'm predicting that rent will stabilize because of that. You will have less spike in the prices of rental. So this was some of the thoughts that came into my mind. If I would be a first-time homebuyer like you, just doing the pro and cons analysis of this new regulation, you need to work towards your assets, but you need to have a roadmap for you. As per him, if you don't find a way to make money while you sleep, you will work until you die. I completely agree with this. I know it might be tough to think as an investor, but you should be educated enough. Let's move on. So this is what they are looking up to. So most of the people who are buyers recently are new Canadians, new immigrants who are entering the market. They are very good with paying their credit card payments, so they are quick in building their credit, but they are a bit slow in getting that education. But on the other side, what I notice is they spend less time saving for down payment because they spend more. They don't know their goal is to save early rather than being paying for someone else's mortgage. Being a tenant, they can be homeowners. That's another trend. Another is they don't go for pre-approval. New Canadians more likely to trade up their home within 5 years. So people change. This is a key learning. You need to start small. Buy your home. Maybe in the future you will be upgrading soon. So your first home is not your dream home because you'll be changing your home soon in next 5 years. So whatever homes as a first-time home buyers they're buying, most of the people are looking for detached homes. Next, more hot is condominiums like the high-rise apartments. Then we have townhomes and semi. But what I have recently noticed is based on current market scenario, a lot of people are going for townhomes and detached. So these are the products which is very prevalent in the market for first-time home buyers. Another thing is nothing against condo market. We sell in condo market too, but as of today's market, realistic data, if you see the graph, this number shows how's the market, like the sales number have been. Specifically, I'm talking about the GTA real estate market. The numbers have gone up, down, but if you see the recent trend, we are almost at the sales of 1990. So this means there were less sales happening in GTA real estate market. Condo markets have plumped recently. This might be an opportunity for you as a first-time home buyer, but if you're thinking on the long-term perspective, condos are a bit slow. So that's why people are preferring more towards GTA market. Another reason for those condo market to be slow is more than 80% of those condos are negatively cash flowing. Reason being higher interest rate. People are not able to afford the mortgage payments. If you are an investor or even as a first-time home buyer, those properties are heavily negative cash flow. So good key learning for you as of today. This trend might change in the future. I had buyers recently who want to buy in Mississauga near to Square One Good for them because they're first time home buyers. They need a 2 bedroom, 1 washroom, and their budget is 450 or 500,000. But if you're looking for the longer perspective, right now the trend is more towards detached or townhomes. Let's move on. This slide will really help you as a first time home buyer to see what type of trends we are getting in the market. We are in a balanced market because right now we have more than 15,000 homes in the market and only 6,000 got sold. This means for every 100 homes, only 45 homes are getting sold. It's sort of a balance out. And year on year appreciation is 0.7%. The average price is obviously more than 1.1 million. Similarly, in Ottawa, also 1,400 homes getting sold. There, it's more of a seller's market. Market is a bit hot because of the price point. The price is around 600,000. London is also again 600,000, but there are less sales happening in London because there's less population, more than 1 million population there. Barrie is again a balance. So you need to see and picture yourself where you're putting your money. As of now, GTA is offering you opportunities, but as you move away, you might be in a seller's market or in a buyer's market. And this is what we are predicting based on past history, how we are anticipating the spring market of 2025 to look like. If you go back into 4 years of history, even covering the COVID part also, April and May months, we saw most number of sales happening. Reason might be because the weather was good, or September was a classing session for the new kids. People were looking for the areas to settle down for their kids, or there was new appraisals happening of maybe in your incomes. That might be the reason, or parents coming for the new immigrants, so they needed a bigger space. Another reason is we have seen interest rates going down during that time frame, and which have given a spike to real estate market. So considering this trend, 2025, we are anticipating month of starting February, March, we'll see spike in number of sales. This is the data of throughout Canadian market in those months where most number of sales happening. As a first time homebuyer, 3 key dates are very important for you. 11th of December this year, where we are anticipating the interest rates to come down. But the most important date is 29th of January and March 12th, which will decide the direction where the real estate market will be moving in 2025. 2 dates, January 29th and March of 12th. If we see another dip in the rate of interest, which we have seen recently, we saw 4 interest rate dips happening because we had a overnight lending rate of 5%, which is 3.75 now, which was very quick. Its impact is still to be judged in the market. It takes 3 to 6 months. So we are anticipating the market to be bit on the hotter side. But those dates of next year, when the Bank of Canada is meeting again, will decide the future of Canadian real estate market. So this is what we have seen historically in the mortgage rate range have been really hot in the market of 2022 because the rate was around 2 to 3%. People were buying heavily. Then we saw a spike in 23. 24 is going down, which might push the market again. Nothing to worry about. A lot of policies changes are happening. They're increasing the affordability by increasing the amortization. They're increasing the affordability by decreasing the down payment requirement, and also the interest rates coming down. This is your financial decision. Be ready for that. Take a calculated risk. Try to create a balance, like as a tenant, how much you are paying. And if you have some savings on the side, why not you buy your own property? Do your maths and numbers again. What we do is we do regular events for you where we will teach you how you can find cash flow properties, what are the areas are good for you to do the investments. I would really appreciate for you to attend those events. So far we have helped more than 2,000 families by these events. Thank you for watching this video. Like and subscribe to this channel. It helps us, it motivates us to make content for you.